Good morning, actually. For those of us that are in London, it's 8:34 in the morning. Just quickly wanted to just see if there's any opportunities. After all, we did have some news for GBP, which was negative, 7 a.m. I can't lie, I did forget about this news event. I won't forget about it tomorrow. And I am looking at news event from a different light now. And normally I avoid these times, and in truth, I will not be, generally speaking, entering whilst news is appearing. But I do agree or have the philosophy that since my strategy is somewhat working, in the sense that I am utilizing, I'm seeing good results, but obviously it is fully down to me, the execution of such. I understand that I need to understand or believe in at least the theory behind why the strategy works. So ICT was talking to us about the strategy, and he was talking to us about how the markets are based off an AI algorithm, which means that the markets are manipulated pretty much, and they have patterns that reoccur over and over again. Now, in that philosophy, if there is manipulation, one of the key easiest ways to manipulate the market would be during high impact news events where there's a surge of volume. So I need to look at the news events, especially when they're red or orange, as times where price can utilize that or institutional use that to manipulate price, and price will be manipulated. So with that being said, I'm gonna kind of go over the markets. I will be traveling today, so I don't know if I'll be able to stream in the degree I would like to stream because there are other things that have a higher priority today. So this may be the only stream for the day. Worst case scenario, though, I do believe I'll probably watch the last episode of ICT. We'll see about that, but that is the goal. So first of all, I want to start with DXY. So give me a second to phone into a charger, and then I will get started. Also, let me turn off DND. Perfectamonte. Alrighty. Right. So let's go. DXY starting on the daily time frame. What do we see? So first of all, yesterday we were bearish because we had come up to this fair value gap and we were targeting these imbalances right here. So first imbalance we have over here, which is the fair value gap from this high to this low. You can see that is the space in between. And then the red box, which is overlapped with the gray box, is simply highlighting, this should be at the same level, it's simply highlighting the area of which there was a market gap, I believe, over the weekend. Let me double check that. No, it's not even over the weekend, it's just between Thursday and Friday last week. Then we had a rejection from the premium, which is the first imbalance area here, downwards. And this imbalance was a part of this imbalance right here, but we'd reduced it because we'd come up this much into the imbalance, and then price came back into it, and then we reduced it again because price came up this much into the imbalance, came back down here, created equal lows, and guess what it did up here? It created more. So now the imbalance is only this much. So we filled up most of it. So I'm actually more leaning towards bearishness than I am actually bullishness. I know price is going up, but there's no reason as in a from the point of view of why, because there's this much imbalance left. The only thing I can say is that we're close to this and we're in the discount. Other than that, though, I'm more bearish. We do have these double bottoms, which are still equal lows, which are still going to be very much a target for institutional liquidity. We have this strong imbalance, which is within a fair value gap, which is very large and very strong, which I believe price needs to get back to. We are coming from the imbalance, from the discount. Yes, we didn't engulf this, but I do believe this could even be a fake out. It is possible, of course, that price goes up, but we're just so close to this that I don't see why we wouldn't just fully fill it. And if you look at it from this perspective on a 4-hour time frame, you can then see that we've taken out this low right here, which is a swing low. So after taking this out, you can say we're bearish on the 4-hourly time frame. What else do you notice? We have a market structure shift, right? Because of the fact there's a fair value gap here. This is the 4-hour, remember. So there's a fair value gap, which is a big displacement taking on this low. And if we're coming back up to this area, I believe we're going to use that to then continue downwards, taking out this space, which I think is very, very much a area of interest. So it is the London session. So we can mark out some of the midnight hour opens and then see what price has done, if this is kind of the manipulation. And if that's the case, we can then get in early, a bit of an aggressive play, but it's a great idea, I believe, in theory. So I am expecting price to come up to this imbalance and then to come back down. despite the fact that it looks bullish now. But I can never really base my bullishness or bias off of the fact that, okay, price is currently bullish 8 hours into the day. Doesn't mean it's going to be a bullish day. On the weekly time frame, I should have an expectation. So weekly, we distributed downwards, created these equal lows, then we distributed upwards. You can see this is a swing low. So, and the weekly were potentially bullish. I don't disagree. I just think that before we continue just going up, I think we need to do something first. So, like here, the turning point was this fair value gap. It came up to the just above it, and then bam, this place super down. Let me see if there's any other price action I can read. So we took out this swing low, became bearish, created a swing low, but this is not really a swing low because it's equal lows, but we did react from that. And we're back up into this premium. There's also an imbalance here, which we filled before, but there's a deeper imbalance here. We've kind of maybe an indecision day, low key. Low key. I'm leaning towards bearishness though. But weekly is a bit hard to say. I think weekly might do a bit of both, like come up here and go down. But technically still bearish. Well, this is swing low. It's not really a swing low in terms of it being lower than this, so it's equal lows. So the swing low is not just a swing low, it's an equal low, so that's why it's a bit different. Okay, let's look at the hourly. An hourly, we're still creating these lower lows. I do think we're bearish on USD. There isn't any news until 1:30 p.m. So I'm actually going to look at CAD as well to try and see. So yesterday, I don't know, I think I did. No, I didn't delete it. So we're in this bullish trade here. Our overall target was up here. I know the charts look messy, but see if I can reduce some of the drawings. We don't need yesterday's. Okay, should be enough for clarity's sake. Okay, so on the daily time frame, we have this fair value gap here, which we've come into, right? And we have this much of the fair value gap, which we haven't filled yet. Let me get rid of these blue lines. You can see the wick of this candlestick, the blue candlestick is right here. So there is this little portion of the fair value gap that is yet to be filled, right? So there is that. Okay, so there is this little portion of fair value that was yet to be filled, but I don't know if that's enough for price to warrant, it going all the way down. There is this fair value below it, which I believe was the reason why I was targeting the bottom of the fair value gap, because I believed last week, Friday, that the price would get down here before going up. Instead, it reversed here. Now, where's it reversing to? There's imbalances. One here, between here and here, and then this is an order block. You can see it's order block because we've had a displacement from here. You can see there's a fair value gap between here and here. So this is the last bullish candlestick before this displacement, which had a market structure shift. So this is a valid order block. And you can see here from the order block, we came back down, retested this area, came back down, retested it again as a kind of a resistance, and then dropped from it. So I believe there, if price gets down here again, it's going to be more institutional order flow. The whole reason why we're bearish is because we had this high here, this high here. This is a failed higher high. We then had this swing low, this extreme taken out from the move last week. So that's why we're bearish. But of course, price can be bullish in the bearish market. So although we're overall bearish, I believe price needs a reason to go down further. And what is that reason? This fair value gap, this order block. So we have this fair value gap here and this order block here. So with the fact that this is kind of the upper echelon of the fair value gap, which yes, it can be used again in theory. I think because we feel that most of it, we can keep it. We're going to keep these two down here just because they signify the rest of the imbalance. If we go back down to a smaller time frame, here you can see clearer the areas of which I'm talking about. So bearish, a bit of a pullback, bearish, a bit of a pullback. So although we're bearish, I still think we're going up towards this kind of area. Why? Because if we go to the hourly time frame, we've actually had a market shift to the upside. We were in the buy yesterday, targeting low-hanging fruit. So we took out most of our trade out here. We risked 2K, made 3K, demo account, okay, emphasize. We were obviously hopefully targeting the bottom of this fair value gap, but I didn't see much potential from the morning session. So I didn't trade the afternoon session, which was kind of this funky movement here. Price came all the way back down here. It didn't reach this fair value gap, but did distribute upwards again at equal highs. So we're gonna get rid of yesterday's information and just keep kind of the. So the reason why we went apart is because time is super important super important to us. So we take out our trades from 10 to 11, right? So between this kind of time frame, regarding the, in fact, I could probably get a box. So from 10 to 11. So this time frame here, let's make it orange, is the time we take out our trades from London session. All right. You also notice that there's this fair value gap here, and price comes up down to it, and then pushes up to create equal highs. When price, the time we do not trade is going to be these vertical lines, right? So from 12, which is lunchtime, to 1, which is the end of lunchtime, we don't trade. From 1:30, we expect price to hunt liquidity. So from this moment in time, we expect it to hunt liquidity. What does it do from 1:30? It goes down, takes this sell side, drops deep into this. To be fair, if you had your entry, like with the rules of our entry, we were stop loss below the first the low of the first candlestick contributing to the fair value gap. So this is the first candlestick contributing to this fair value gap because it's a 3 candlestick pattern. And we look at the low of that candle and we sell stop loss below it with a little bit of spread. So this would have been safe. So even if it came all the way back down here, you would have still been in the trade if you'd entered it, for example, at the end of the closing hour, right? Which we wouldn't have done anyway, but I'm just saying. So with that, price comes all the way back down here. Excuse me. This is price comes all the way back down here. It's taking out some of this sell side for the people that had a tight stop loss. Maybe, to be fair, I don't know if institutions or retail traders buy this or not. But either which way, it takes up some sell side below this low before it then distributes again higher. So once this liquidity has been taken and you had this market shift, you could then look for a re-entry, but price didn't come back in time. By the time it came back down, it was midnight. Okay, so that's kind of the things that happened yesterday. I think it's always important to utilize, follow the price from time frames. So like one of my mistakes 2 weeks ago was I was analyzing each time frame as its own identity. I wasn't linking them together. So I was analyzing the daily, finding the bias. Whatever happened in the open, I would say is the new bias. So I wasn't really kind of looking, I wasn't syncing up. I was out of sync. So I believe synchronization is important from daily time frame to the 1 minute. I also believe synchronization is important from Monday to Tuesday to Wednesday, which is technically a daily time frame, but every specific candle, I think, tells a story. So let's reanalyze now. We've kind of gone over yesterday's moves, starting with midnight open, which would be over here. I'm going to grab that line and draw the open, which would be up here. But that's, yeah, it's Tuesday. Yeah. Okay, almost on the 1 minute time frame, which is why it looks. Okay. Template, midnight open. So we are bearish on USD. So we're actually bullish in terms of this pair. So if we go back to DXY, we're expecting price to come up here to come down, but essentially come down. All right, we're expecting to drop because of the imbalance it's close to. So we're expecting price to drop on the dollar. On the dollar here, if we want the dollar to go down, we need this to go up because then that means that it's weaker. So it needs to go up. So what is all of this a part of? The Judas swing. And you can see this could be either a high impact day or a doji day. Why? Because we opened coming down, which is great if you want to be bullish, right? Because this is the fake out. We came up to the equal highs, but we didn't create any continuation. Instead, we took out more liquidity. So it's like a downtrend. So what does this show? So this is dangerous because you can see that there is a fair value gap here. Let me see what the hour is saying. Let's go back to 15. So the hour, the 50-minute time frame is showing a displacement to the downside. We took liquidity on the highs. We took out these equal highs here, and we created equal highs here. Make this grey. I don't have a grey template. Save that. So we have this equal highs over here, and we've created this liquidity. We displaced, took out this swing low, right? We then came up, created equal highs, displaced downwards, took out swing lows, and displaced them doing so, which confirmed that it's a genuine shift. Now, this could be all part of the idea of DXY being bullish, that it continue down, consolidate, and eventually comes up. But at the end of the day, this is why I say it's dangerous, because we've taken out this area. Now, here's the thing. We believe that this is all part of the Judas swing. So if this from when I open to here is the Judas swing, right? Obviously, it could continue going down. But one of the things we've learnt is that, hold on, is there a way to rotate this without changing the size? Or just locks it in place? I need the same length. Be the easiest to just create another one. Oh my, what's going on here then? Okay, that's gonna be a bit difficult. But anyway, the distance from here to here, actually, there's probably a better way to do this. And then about 11 pips. I just did a vertical line instead of a horizontal one. 11 pips where we are here. Cut it off. Alt H. And then Alt H. So between these blue lines, if price was to, of course, not create a lower low, this would be the accumulation range. So manipulation, accumulation. So essentially, to enter buys anywhere in this blue zone is the goal. Why does it keep doing that? Weird. Okay, so this is the accumulation zone. So we're expecting price to kind of stay in this range before we enter our personal buys. Now, another key strategy or key piece of information is that you want to enter buys as close as possible to the midnight open. Or, of course, if you're not, that needs to chill out. If you're not able to, then it would be the session open, which is 8:30 for New York time. Just go back to you. I don't want my charts acting like that. Okay. Right, so we have the midnight open. Okay, just keep the fair value gap in play because I do want to see it. I'm expecting price to go up. So what would I need to see? So we go down to a smaller time frame. We've had the market just to shift to the upside. Give me a second. Okay, so if I was a bit crazy, if I was super confident in my excuse me, tape reading for the daily bias, I'll be looking for price to come down at this area and then entering buys. So this is a potential for an opportunity to enter during London session. It feels weird because I'm going against I'm going against price action basically. But we have my stop loss about here. Now the good thing is that to be fair, we do have a live account now. But I would aim for low hanging fruit, which is literally this equal heights. This will be my first kind of target. The only way I would enter this is if price from this fair value gap drops down, and then I'll be looking for price to target these relative equal highs. This is simply just based off of tape reading, the fact that I am bearish on the daily time frame. I know the current state is bullish in terms of it's a bullish candle, but I just feel that the imbalances over here are too strong. and we are coming from a discount from yesterday's session. So I think we're just coming up as a reaction, but I do think we're overall bearish. And for that reason, I'll be overall bearish here. So there is an idea of price could drop into this area, right? We have this fair value gap, drop into this area, and then buying it to these equal highs that were created from the market midnight open, sweep, push to the upside, the Judas swing. Now, I don't think this will be where price ends up. If it's a doji day, it can very much just stay within this range. If it's a day of high impact, we can definitely see displacement or distribution towards the low of the fair value gap we drew on the daily time frame. This is a 4 hour. So the daily time frame, this is a fair value gap. Might as well just show you. Here, we'll be aiming for this red line here. So that's all we're doing. That same red line is the low of the fair value gap. So that will be kind of the overall target, with us taking a large majority over here, since this is all 1 to 3.5 anyway, which is very good. And low hanging fruit would be what I would be aiming for. So I also believe there could be even further opportunities once we see the New York session open. So I believe London session's job is to kind of create liquidity. New York might sweep the liquidity, then push to the upside. Obviously, this is all early news. So this is my opinion on EU. I would not enter much on this because it's not as clean. Because, yeah. But this is the general idea. So I'll probably set an alert. And I will be traveling, so this is why alerts are going to be important. If price comes up, it's not enough. I may require a larger time frame marker to shift, which would be the hourly, for example, or the 15-minute taking out this high, which is the target anyway. So we have to take out, we'd have to go up, take this out, and within that displacing leg, accept price to come back down to then continue up. Whether this happens at New York Open, during London, I don't know, but that's kind of the formation I'll be looking for. So that's EU. Now, we do have news happening at 1:30, which would be CAD. So I like to look at, I don't know if I have it available here, actually. Should do. I would need to, let's click on USD CAD. Let's have a look at it from the daily downwards, right? So, starting with the weekly time frame, we have been bullish for the past 2 weeks. The idea is, do we continue? So first things first is that we have this fair value gap, and this is the bit of it that's left to be filled. When we had this bullish fair value gap here, price not only filled it, kept going down. So potentially, if we see that same pattern play out, excuse me, we could see price fill this and continue up. We also have this high right here. Swing high, swing high. This is more of a sweep on liquidity than it is a higher high. So pushes down, kind of into the nowhere, and then it's coming back up to this imbalance. I expect price to go up here. Now, I'd rather not see this as a high, because I see it's more as a sweep of liquidity to push the downside. We've taken out lows here, but we didn't take out this low and we created this low. So there is still some sell-side liquidity here. Although we had a bullish fair value gap and we went up and distributed through it, it's because we had a liquidity sweep back in it. Here, we don't really have a liquidity sweep on a swing high, an extreme swing high on a weekly time frame. So based on this weekly time frame, I cannot say that price will distribute through this, because this swing low does not take out this swing low. So we don't have the same pattern, right? Over here, we have a swing high, and this swing high is higher, which is a liquidity sweep, right? So this is a liquidity sweep right here. Then we push and distribute to the downside through this bullish fair value gap. I would expect the same thing to happen again, right? But this time around, we have this swing high while we distribute through this fair value gap if we haven't taken out sell-side liquidity. Because remember, this took out this liquidity first. This, we haven't taken out this liquidity. We've taken out liquidity here, this, that, but not the swing extremes. So with that being said, I don't think we'll distribute through. We also see a slight rejection, and we are currently still in the fair value gap. So it's very much plausible that we could potentially even maybe go up a little bit higher or just distribute straight down. So actually bearish potentially on the weekly. On the daily time frame, we are actually bullish, and the fair value gaps on the hour daily, is very tiny. I'll show you. That orange bit is the daily, that gray bit is the weekly. So it's interesting that we don't really have the cleanest one. So there is some lines we can create. Perfect. So with that, we can then get rid of these. So let's make this opacity a little bit lighter. So this is the low of the daily fair value gap. This is the low of the weekly fair value gap. Okay, so we're bullish up into this area on the hourly. Let's actually go to 4-hourly. So on the 4-hourly, you can see that we are actually bullish on the short term. Why? Because we've taken our structure here. This swing high, this swing high. These equal highs have all been taken out. We were creating these higher highs and higher lows over here. And price looks just, for the most part, quite bullish. This is the low of the weekly fair value gap, which we've tagged a little bit here, come down, and I believe we can still go up. I'm not going to lie, I think this is actually bullish. And the only thing is, in the short term, is more like indecision. So let me grab the midnight open. So EU's come back down to an entry, I think. Have a quick look at DXY before I potentially enter. Not gonna lie, USD does look bullish. This is probably a demo count trade. Ooh. 6296. It's about 3-5 pips, maybe. Risk 2K. 40. Right, now would I enter this on a live account? Was entry on 6388 or 338? Okay, cool. So we're going as the buy. Active until 6457. So to break this trade down, this is a demo account trade. I don't think I'll ever, well, not ever, but I don't think I would enter this on a live account. Why? Because we do look bullish. That is the price action. DXY is a bit, it's not doing what I would like. Put it like that. I think we're bearish. However, there's multiple areas where we could be bearish. You can be bearish from this. Well, we zoom in a little bit. There is this fair value gap, so we could come up to it to drop down. We could even come up to this imbalance to drop down. We could even just continue up. So we are in this discount area. It's just that the discount area, we aren't exactly using the best area. Like there is technically a fair value gap on the 4-hour time frame that we've come down into to push up. But when you have this imbalance here and this there, price would want to fill this. So that's why I'm not really sure about that blue fair value gap. On the EU, I mean, there's very much a plausible reason for price to go up in the sense that we are banking on our bias heavily. But again, I'm not too sure I could enter this on a live account confidently. Like I'd risk a small amount. So I'm gonna do. I've entered this on a demo account. Let's see what happens because technically price action is fully against us. So this is based on instincts and skill sets and kind of like personal ability and whatnot. So for that reason, I'm gonna buy it to this low fruit, hanging fruit, and see what happens. We might be wrong, but it will just showcase whether or not we have to really how powerful daily bias is. Because if your daily bias is so strong, if you see anything presenting itself to you, you can definitely see price potentially continue up. Right. So that's all for today. I tried to make it an half an hour long, which we've just hit 30 seconds ago. So not the most we could do, but we may stream again later today. But I wanted to do something just in case I cannot make it. As I said, I do have important things to do. So they want to not show up at all. So that's the trade for today, and we'll see what happens further on in the time. Like I said, this is a demo account trade. I will not enter this in a live because it's against some of the principles we're trading. So that's it for me for now, and I'll see you guys either later today or tomorrow, and maybe on the laptop as well. Let's see what this trade ends up. See you guys later. Peace.